What's up, guys? It's your boy Looney. Everyone loves talking about the next big stock or crazy 10x trade. But honestly, my best performing strategy isn't exciting at all. It's slow, it's methodical, and it's boring. And yet, this boring portfolio has quietly beaten the market, not by guessing trends, but by collecting steady income week by week, every single week. But before we get into this video, quick shout out to the Discord. It is free to join, and I also offer a premium membership, which is $8 a month, and you get access to one-on-one coaching, trade callouts. I have courses on option trading, I do giveaways, and more. You can check it out. All the links are in the description. So you can see here, past year, I'm up 43%, all time, 61%. But on the year to date, 28, and 3 months, 14%. So my goal isn't to double my portfolio overnight. Realistically, I try to make 1 to 4% per month. And we could see I'm actually doing that in the past 3 months. So while most people chase meme stocks or gamble on earnings, I focus on small, consistent wins that add up. Because when you zoom out, slow and steady almost always beats random volatility. So the core of this boring strategy is selling options. I sell puts on stocks I actually want to own at prices that I'd be happy to buy them at. And if I get assigned or I have to acquire these shares, that's no problem. I turn around and I sell covered calls on those shares. So that's how I create income, whether the market is up, down, or sideways. You can see it's not about predicting, it's about getting paid for being patient. So let's actually pull up an example on Webull. I have 2 trades. One of them is going good and one of them is not going so good. So I have a few open positions on Webull, the $12 and a $10 put. So this one, I sold a $12 put that I am basically saying I'm comfortable owning Webull at $12. And to do that, I got a premium of $58 upfront. Goes into my buying power. I could do whatever I want with that $58. I could put it into the stock Webull itself and buy shares. I could put it into another stock. I could simply just hold it as cash and let it earn interest. But the 58 goes into your portfolio right away. You don't realize that gain until the trade is over, but no matter what, you get that upfront premium. So if the stock stays above $12 or whatever strike price you chose, you get to keep that premium as a net gain or a realized gain. And if it dips below that $12 strike price, I get assigned the shares at a discount and you still get that premium. So instead of buying shares at $12, really I am buying it at $11.42 if you factor in the premium. Sometimes Robinhood does actually do that when it pulls up your average costs. I'm curious to see what it will show when I actually get acquired the shares. Because right now it's looking like I'm going to get acquired these shares because I think next week these expire and Webull is trading below $12. So I'm definitely okay with that. But either way, I see it as a win-win because I'm not gambling. I'm just simply managing probabilities. Because once I get assigned these shares, I can actually sell covered calls against it and do the same process and generate income on my shares that I own. Instead of having the collecting premium on cash, it now turns into shares. So I'm able to work with whatever kind of scenario. And then also I'm dollar cost averaging. So I have that $10 put, and that one's actually not in the money, which is a good thing. You don't want your selling puts to be in the money. So I'm in a better scenario with that. And doing this trade, I got paid $37. So not only did I make $58, but I made another $37. And this one is in a better position. And I'll get that cash back. And maybe I'll sell more puts on Webull. We'll see. But we'll see what actually goes on. Maybe Webull does go down to $10. And if it does, I'll get assigned and my average cost will be somewhere in between the two strike prices. So I'm able to dollar cost average and be strategic with selling options. So you can see how versatile this strategy really is. And the reason this strategy works and it's boring is because it's simple. And most people want excitement, but but not the results. And they'll chase those FOMO buys, those hype stocks, those hype trades, and they'll risk everything for just quick profits, hoping to double their money. And when it hits, it does hit big, but when you lose, you do lose big. So doing selling options a lot more consistent, and I'm over here sitting and just stacking those small gains that are able to compound over time, because that trade isn't a big winner. It's only like a 1 to 4% win. But if we get 2% a month consistently and we compound it, it's nearly 27% per year. And that quietly beats most funds or indexes. We could see here past year I'm at 43%. So I even did better than that. And if we look at like SPY, for example, this is one of the bigger ETFs. And on the past year, it's up 16%, which is really good. But you can see I'm more than double the return of this in the past year. Now, yes, there are going to be some bad months. I'm not going to be able to hit my goals every month, but it is consistent and it's not a all or nothing sort of mentality. But the hardest part of this strategy isn't actually the math. It's really the patience. Because you have to be okay with watching everyone else chase hype while you collect small wins. Because if Webull doubles, shareholders will make a ton of money, but I'll still win on my side of things, and I'm okay with missing out. Because you can't predict these things, or it's very hard to predict these things on a long-term environment or experiment. Yes, you can get lucky now and then, but doing a day trade or some sort of win all trade is not something that is replicable. So I like doing these consistent trades that I could do over and over again. Sure, I'll miss out on those massive jumps, but I'm okay with that. And yeah, if you stick to your system and you manage risk, the boring portfolio actually becomes powerful. And even in a bear market, it does work. Right now we're in a bull market, so it's a bit tough to sell puts, but usually when there's a dip, I do actually do this strategy, and I'm not going all in. I'm making sure I'm position sizing appropriate. I'm not doing 10 trades at once. I'm doing like 1 or 2 and making sure I'm dollar cost averaging with this strategy. So yeah, this strategy is not flashy. It's not really viral, but it's consistent because the boring portfolio wins. It focuses on process over prediction. So I'll happily take that 1 to 4% per month instead of random hype days that you see. You can see here, I'm up almost 6%. Yes, I saw some dips, and these dips weren't from going all in trades, but they were from selling options. And yes, I do have some risky stocks, but you can see very consistent. 6% past 3 months, I am up 15%. Year to date, I'm beating the market at 28%. So I'm not getting 100% gains, but I am getting that consistent return and that consistent climb. So I hope you guys enjoyed this video. If you did, leave a like, and until next time, peace.